The day started with a bearish leg down, and what I'm going to do is I'm going to use a couple of previous days price action moves to make sense of what happened today. What I'm going to do, I'm going to draw a shortened downtrend of these lows to kind of get an idea where the downtrend started. And the reason why am I doing this is because this high right here is a little bit higher than this high, and now it makes much more sense. We have a downtrend working lower, we have a break and a new low. According to trendline rules, after trendline will break, traders will attempt to make a new extreme. So when I see this, I see that the downtrend played out. Price created a new low, and we have a first entry short, first attempt by the bears to pull the market lower, pull back, second attempt by the bears to push market lower. Now this is starting to look like a reversal pattern, and a couple bars later, price pushed above the EMA. So when I'm watching this, instantly I'm starting to shifting my mind. I'm only going to be looking for reasons to buy this market because the downtrend played out, reversal pattern occurred, and we are now trending above the EMA. So once I see this bullish bar, we broke above the EMA, I'm switching only into longs only mindset. As I'm looking at the charts going higher and higher, price create a new high. And when I'm in an uptrend, I'm looking for high probability entries. And high probability entry is a two-legged pullback at the key entry point. Key entry point is either trend line, support resistance line, or exponential moving average. This blue line right here, this is the 21 bar exponential moving average. This is just a supportive indicator, but it can act as a key entry point. Now I have a new high right here. So I'm counting my entries. First bearish bar, first bullish bar, and this is the first entry long. This is the first attempt by the bulls to push the market higher from this high right here, and it worked. There is no pullback, there is no second entry, so I'm just watching the market go, and I'm just focusing on the second entries because first entries are not reliable. As we keep making higher highs and higher lows, what I can also do is I can find a potential trend line, something like this, because from the first two swings of the start of the day, a lot of times this will give you an idea where a potential trend line is going to be. So there's always some sort of trend line when there is a trend up. So this was the trend line that I was looking for, and this is the first two swings, and you guys can see that the prices are confirming the trend line right here, but it is not confirmed yet. This is just first two swings. The third swing confirms the trend line. Two swings just set the trend line. We have a new high right here. We have a first bearish bar, another bullish bar, and just a first entry, and market continue working higher. So I'm not doing anything. I'm not interested in trading. I'm just watching the market go. I'm sitting on my hands because I'm looking for second entries at the key entry point. Now, this is normally where we would start trading because this is still the pre-market open session. Now the US open session is opening soon. So this is normally where a lot of professional traders are starting to trade. We have a new high right here. We have a bearish bar. Okay. Some selling pressure. We have a first bullish bar, and we have a first entry long. So this is the first attempt by the bulls to push the market higher. But I'm far away from key entry point. It is not second entry, so I'm not going to take this trade. Even though it's uptrend, I'm just going to sit on my hands. This is not a high probability setup. And it failed. First entry failed because it is just a first entry. It is unreliable. And we have a, let me make it a little bit bigger. We have a big bearish bar, another big bearish bar, and we have a third bearish bar. And notice how this third bearish bar suddenly doesn't look so strong as two previous bearish bar. There's a stim at the highs and stim at the lows. This is very close to looking like a doji, and there's a reason why. Right now we're at the EMA and we are bouncing off the trend line. We are at the key entry point. So right now I'm starting to pay a little bit more attention. Still doesn't matter because still I need to see a bullish bar because we are buying. Okay, so the next bar is bullish, and now is the exact time where I'm starting to pay attention. Now I'm going over again that I did. I want to confirm what I'm looking at. I see the new high. I see first entry long, pullback, pullback, pullback. Second entry long may trigger soon. This is a nice big bullish bar. We are at the two key entry points. More key entry points you have, the better. I'm going to draw my shortened trend line. This is the first legged move, pullback. Second legged move. This is a two-legged move down, and we are in an uptrend, and the downtrend played out. So I'm preparing my limit order at this point on to go long. I'm not thinking short. We are still in this uptrend. I can put it even here to make it nicer. So I'm watching the market, and we didn't get the entry higher, but we are still respecting the key entry point. I'm still thinking then I'm gonna go long here. Make no mistake about it, this candle will not shake us. Another bar is bullish. We finally broke above this bullish bar. So what can you do when you finally break above this bullish bar? You can place your limit order as far as you want. I normally put it at the close or 1 or 2 ticks further. Today I put it at the close and I got filled because we're at the 2 key entry points. It is a second entry long and market is working higher. You scalp out and your one contract is running. Now I want you to take a look on this price action. I'm going to enlarge it so you guys can see how it looks on a bigger picture. And this pattern is very similar to a pattern that occurred a couple of Fridays ago. Take a look, guys. We have a channel working higher. We have a nice trend line. We have a first leg, pullback, second leg, little break, new low, 3 bearish bars, and a 2 key entry points, second entry long off 2 key entry points. The day started with an uptrend. This is almost identical entry. First entry long, second entry long, 2 key entry points. We are in this uptrend, very similar pattern. And I'm going to show you a similar pattern once again that happened a week ago. And this is why I knew that I was going to use a previous day price action, because the Friday, the August 6th, happened exactly the same way. We have a downtrend working lower, we have a break and a new low. You have a first entry short, second entry short, hold on, this is a double bottom, so count is resetting. You have a first entry short, pullback, second entry short, and you're working higher. There is a trend line. There's a second entry long of this trend line. Very similar pattern. So this is why I knew that I need to use the previous day's price action, because it acts the same way. Here we have just a first entry and it failed because this is just a first entry attempt. Now, why I believe so strongly that the patterns will repeat? Well, because it is tied down to human psychology. Every single trader who's putting trade into the market has a reason why they made their analysis. There are thousands of strategies that traders use. It don't matter. Somebody is using RSI divergences. Somebody is using price action, naked chart reading. All these strategies will make a formation on the chart and it will depict the human behavior. This is why the patterns repeat over and over again. You guys can see today's Friday is playing out exactly as the previous days as I depicted. Now, as I'm holding my runner and the market goes higher, let's say you're not holding a runner as you're only scalping out. What I'm doing right now, we are working higher. Am I interested in selling or am I interested in buying? Well, I'm not interested in anything because I don't want to sell, because we are still in this uptrend. Until we have a break and a retest of a new extreme, I'm not interested in selling, but I'm not going to go long either because we are far away from key entry point. So I'm just going to sit on my hands and not do anything. We have a first entry long at the very high. It is not at the key entry point and prices are pushing lower. Now, we have a second entry long that triggered, and let me make a clear the first entry according to rules. Hold on, I'm going to mark it. We have a second entry long that triggered above this bar, but we cannot take this second entry long because it is a big bearish bar. Remember, we are buying, so this is the bar that we want to go long after, or a potential doji looking bar, but this is a full-on bearish bar. There are like 2-3 ticks of a bearish body. We cannot go long below EMA on a bearish body like this, even though we broke the trend line and we are expecting a new high. So I'm sitting on my hands. I'm just going to draw the trend line and look what we have here. We have a potential first entry long, second entry long failure, which would be a trap, but this is not a trap because we are in an uptrend still and we don't have a new high. So we cannot take this second entry short. I'm just still sitting on my hands. Even though it is tempting, I'm just still sitting on my hands. Excuse me, first second entry long. I'm sitting on my hands. I'm letting this play out because I know that after price will break the trend line, traders will attempt to make a new extreme. So I'm sitting on my hands. We finally have a break and new low. We have a big bullish bar. Okay, now I'm starting to get interested because downtrend played out and I may get a chance to go long. This is too big below EMA. So this is not a high probability setup and market just keeps working and there is no way for me to enter. There is no reversal pattern. This is a reversal pattern. Failed 2 attempts in the previous trade's direction. None of this happened right here. I just have to sit on my hand, just happy with my one trade and watch the market go without me. And that's okay. That's part of being a trader when you want to take a high probability setups. We finally formed a new high. Now, I see a big bearish bar like here. Quite a nice pin bar. I'm not going to pick a top yet because that's not a high probability setup just yet. I want to wait for a reversal pattern from the upside. We have a big bearish bar, we have a bullish bar. I'm just sitting on my hands, I'm not doing anything. We're bouncing off the EMA, so it may look like we may go long, but no, the uptrend played out with the break and a new high. So I'm not doing anything. I'm just sitting on my hands, not doing anything, still just watching. Okay, we have a bearish bar, not doing anything. We don't even have a first entry long. We have another bullish bar confirming the bounce off the EMA, and it looks like it traded down, and at the very end of the bar traded higher. This can be tempting, but only to a novice trader, because if you're if you are aware of price action rules, let me rephrase it, you already know that I'm repeating myself, but it is very important. You already know that the trend played out with the break and a new high. So we are not going to go long after all this move happened and when the downtrend is supposed to start, or at least correction, and resulted in a trap, big bearish bar. I'm just sitting on my hands, because if I want to go short, I want to see a failed second entry long below EMA, but I don't get this here. I'm just working lower. What do we have here now? We'll take a look where we bounce. We bounce right here, we bounce right here, we bounce right here. And once again, I got a flashback to a day like this. Very similar, we continue working in a trading range. You don't need to have a flashback of a previous memories to identify that there's some strong support here. So what I'm going to do is I'm going to draw a support, put it somewhere around here. You guys can see how nicely it confirms. I can even put it at the top. Let's say put it right here for now. And you guys can see how we're starting to swing up and down, up and down. I'm going to zoom out a little bit so you guys can see the bigger pattern. We're from the top to the lows, up, down, up, down. So we're right now in a consolidating market. Okay, the uptrend played out. We are in a consolidating market. So I'm looking to buy the lows and sell the highs. And I'm going to once again draw the short-term trend line, something like this. So this is the first legged move, break, and the second legged move to the support. So the downtrend played out. Okay, so I'm no longer interested in selling, especially not after all this move at the very low of this trading range. This is not too good of a bar to take a long here. It would be a great bar. It would be a first entry long, pullback, second entry long. I'm going to mark it as an educational purpose only if this bar was a little bit more bullish. If this was a bullish bar instead of bearish bar, green body, this would be a good long, because it is after break and a new low, two-legged move down, and a second entry long. High probability setup at the key entry point, but you cannot take this long yet. So you're watching the market go. You have a first entry short, pullback. You have a second entry short. You're not going to go short on a second entry short at the bottom of a trading range after downtrend played out. So you have to sit on your hands, but I'm expecting some sort of bounce here. And what do we have here? We finally have a bullish bar, okay, but we're still below EMA. This is not what I want to see. And right now, as you guys can see, there's a lot of congestion here. 1, 2, 3, 4, 5, 6, 7 bars going sideways right now. This is a congestion, tiny little congestion, but it's there. If this bar closed above the EMA, this would be a good failed second entry short to take. And what happened? We are breaking this congestion, okay, and we instantly pull back lower. This is how these congestions play out. Most breakouts of these congestions will just fail. That's just how it is, okay? But right now, you don't want to go short either. I guarantee you there's a lot of people trading momentum, seeing this big bearish bar and piling the shorts at the very low of this trading range. It didn't stop them that the second entry short failed horribly. They still see this big bearish bar, and a lot of people, make no mistake about it, there's hundreds of strategies, and a lot of people trade a big candles. They think there's some sort of significance and meaning to this. It's absolutely horrible way to trade. And now we finally have another entry. Now I'm going to mark this trade. This was very tempting to trade live, to take this trade. This is advanced trade, because the way I like it is because we broke higher, pull back, so the congestion played out. We're coming off the low, so you're just looking for reasons to buy. And this was a nice trap. This big of a bar trapped a lot of people in. A lot of people were selling in the middle of this bar, and then a nice big bullish bar. It is basically a continuation of this failed second entry short. However, at this point on, there is a congestion. Even though if you have a small break higher and you pull back, still you can make a case that this is starting to look a very congestive. So definitely a beginner trader should sit on his hands and not do anything here, because it is not worth taking. But an advanced trader can see that you're basically, it's a matter of time where you're going to go higher from here. And remember, we're playing the trading range rules, and we are working higher. We are working higher. I'm not doing anything. I'm not doing anything because we're far away from any key entry. But okay, we're starting to get to the top, so we may look for potential shorts. And what do we have here? We have a bearish bar. Even though this is a neutral close, the stem is bearish. It means we traded up higher, and at the very end of the bar, we continue working lower. If you measure the legs either like this or like this, you have a two-legged move up, very similar to what we had right here, but on our way down. We have a two-legged move down. You can see that the first leg is tiny, the second leg is much bigger. First leg is tiny, and the second leg is much bigger. We're at the high of a trading range, uptrend played out, and we are far away from EMA. So according to trading range rules, this is an entry we can take because the uptrend already played out, okay? We're coming off the highs. And what do we get? We get a nice bearish move down. So we have a nice bearish move down. So what I'm going to do, I'm going to draw my short-term trend line so that I know I'm on the right side of the market. You guys can see I'm constantly drawing the short-term trend lines because I really want to see whether I'm doing things right or wrong, because it is all playing out perfectly. The break new low, the break new high, the break new low, the break new high. We're working lower. Oh, and we're pushing way below EMA. Okay, so we may have a downtrend. We have a first entry long at the middle of trading range, so I'm not going to do anything. Remember, we want to skip the middle of trading range. We have a first entry long, and it failed. No surprise there. We're trading lower, trading lower. We have a lower high setup, but now it's at the middle of trading range. We should rather skip this trade. Okay, we have first leg, pull back, second leg. So the downtrend played out because we have a break and a new low. We have a doji. We have a big bearish bar. Okay, so this is a second entry long. It's starting to get tempting right now to look for buys because the downtrend played out, but you never know whether you're going to get a few more pushes to this resistance, to this support. Remember, if it's a healthy trading range, which looks like it is right now, you're going to go from the lows to the highs and from the highs to the lows. So there's still some room. You're in the middle, so you want to wait. Okay, you want to wait right now. You have a second entry long. I'm sitting on my hands, and it looks like a second entry long failure. So it looks like a failed second entry long. I'm not going to go short. Why? Because the downtrend played out. Okay, so I'm not interested in shorting this market. And this is very important because there's going to be advanced setup soon. And I want you guys to understand, because the crucial information here is to really realize that the downtrend played out and is a two-legged move down. You're at the middle of trading range, but I'm still letting the trade play out. Okay, I'm not really thinking I'm going to do anything right now. When I was watching it live and when we were watching it, I'm just sitting on my hands. Even though the market is really slow, it's Friday, I'm sitting on my hands. I'm in the middle of trading range. Yes, I want to go long, but not really, because I'm expecting a still move here. So I'm letting the trade play out. And look what we have. It looked like we're going to have a nice failed second entry long, and we're going to push lower. But at the very end of the bar, we traded up higher. And at this point on, since I'm watching this, and we managed to close slightly above the EMA or at the EMA, as I'm watching this, I'm starting to think that a lot of sellers got trapped here on a failed second entry long. They're looking at this as a trap, and they don't realize that the downtrend played out. Okay, so we traded down lower big time and ended up working higher. So I'm starting to think I may get a long here. It is going to be aggressive trade because I'm in the middle of trading range, but there's something telling me that we just cannot move lower. We didn't make a move down on the first leg, we didn't make a move down on the second leg, and now we have a trap potential, and we couldn't even make it down here. What is this? Okay, what is this? There's very few sellers left. And then we have a nice bullish bar above the EMA, basically confirming what I want to see and my thought process prior to this bar. So I'm going to mark this trade. It is aggressive trade because we are right now in the middle of trading range, but an advanced trader with everything I've described should be able to recognize this, and your bias should be up. Okay, and it took a little bit. It looked like it was going to stop me out, and it didn't. My stop loss still would be below this bar. Okay, and it worked barely. It's starting to get congestive now. We're working higher. I'm expecting for price to reach this upper side of the trading range. Okay, I'm expecting for prices to reach this upper side of the trading range. We have a break, new high. You have first entry long right here. You have a lower high setup, but it is starting to get very confusing now. What's going on? Are we going to go long? Are we going to go short? We're not even touching the support. We're not touching the resistance. So at this point on, I was just sitting on my hands. It's starting to get very congested. Now it's starting to look really like a congestion, like a no man's land. You're definitely now in the middle of trading range. You can't make it either to one of those extremes, and it just ended up chopping, and you want to stay away from this. There is a congestion. You have a failed break lower. Most breakouts of these congestions will fail. And right now you're continuing to work higher, but you're just stacked. EMA is exactly in the middle of those bars. It is better to stay away from this. And this is how you read the price chart bar by bar. So hopefully this was helpful. Important thing is to realize that it is really useful to get the experience, because this is extremely similar to this right here. And even if you take a look at this downtrend break any new low and this reversal pattern that resulted into uptrend, this is almost identical what happened right here. Break, new low, reversal pattern that resulted into an uptrend. All you just have to do is have a little bit of experience, and these patterns will repeat. They repeat over and over. The charts are the same 40 years ago. Anyway, I'm gonna stop rambling. This was the chart for the day. Once again, not too many setups. This was an easy setup. Anybody can spot this. What more? This is the perfect price action. Two-legged move, second entry long, 2 key entry points in an uptrend. Even if you just take one trade a day, this trade right here, I mean, it's okay to make $200 a day trading 10 minutes. You know, you should be absolutely fine with that. There's always going to be 1 or 2 good trades a day that is worth waiting on. And if you're just patient, the trades will make their way to the key entry points. Okay, so I wish you a good weekend. Relax, clear your mind, and hopefully the next week is going to be much more volatile. So take care, buddy.